Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Don't forget to subscribe, like, and share these videos. A brief announcement before I get into tonight's commentary. There is a WaveTech training session, so all of you that have subscribed to the WaveTech research tool, there will be a meeting at 4:30 Eastern Time. There is a Zoom link that is out to everybody who is subscribed to the software. Also, we will be simulcasting this on YouTube in a live cast. Make sure you set your calendars. We look forward to working with you. There's going to be question and answers, a lot of details. It's an hour-and-a-half meeting. Well, once again, we saw the markets right on the edge, and we get an announcement by the Fed. They're going to buy corporate bonds. Remember these words that Chairman Powell said in the last meeting. They're going to forcefully, proactively, and aggressively support the markets. It's interesting of the timing of this announcement. It's right before he's going to be testifying for the next 2 days in front of Congress. Today's activity will be driven by the opening comments at 10 o'clock Eastern Time in the morning and throughout the session. So the algorithms and the machines, just like they did yesterday, will be picking up keywords and driving the market. I mentioned in last night's video, Chairman Powell is going to have to do a much better job than he did last week after the FOMC meeting. The next 2 days of presentations by the chairman will be critical to solidifying the support that the Fed is planning on supplying to the markets. The question is, was there really something going on in the corporate bond market that warranted this type of action? There didn't seem to be any signs of stress in the corporate markets at the time. It appears it was an opportunity for them to attempt to change market sentiment, which obviously was incredibly successful. Markets came in at some major support numbers that I discussed in last night's video. We saw the sharp reversal virtually right off the open, and within the first hour of trade, we started to move the markets sharply higher, ultimately breaking into a positive territory. The market momentum that we saw in yesterday's reversal was truly amazing. There were several sharp surges that happened. There were air pockets all over the markets. Once again, when we see these type of moves, I've talked about this a lot, that there's air pockets in the markets. I talked about last night that the alternate wave count was triggered. This was based upon the action in the futures. And it's interesting, which I'll go through here in a minute in the technical section, that there were some numbers that were not triggered on the cash markets. The reversal we saw yesterday has possibly changed the configuration to go back to the original wave count. I know people are going to criticize me for flipping. Markets drive the analysis. I don't do predictions. I follow the markets and what they tell me. Now, one of the things I also discussed last night is that our database on a short-term basis, if the market closed lower, was going to basically dump a lot of stocks. Well, that didn't happen. The reversal pushed a lot of stocks back above their key levels, and we saw many of these positions hold on. There was virtually no selling. I'll go through that in detail here in just a couple of minutes. The level of volatility that we're seeing going all the way back to the collapse and to today, we're seeing the same types of characteristics when these big moves happen, whether they're up or down. We see illiquidity followed by air pockets, and by an air pocket, I mean there's just a very small amount of volume is capable of moving the market sharply, where they might rally 10 or 15 handles on the S&P just out of nowhere. The primary fundamental event that's going to happen today is a release of retail sales and some housing stats. I don't think either of them are going to drive the markets, but we have seen these metrics come out better than expected. Let's get into the charts and see what's likely to unfold in today's action. As we open up the WaveTech research tool and we look at the research area on weekly searches, you're going to see the database is currently 39.41% bullish. I discussed this last night. There were about 800 new buys. I talked about the advantage on the lower opening that the pricing was going to get on individual stocks and the ETFs. Now, mutual funds ended up paying up if you were doing those type of trades based on the signals that came out for Monday's opening. So I click on the daily searches. That'll bring up the short-term models, and you see where it's 79.41. There was very little selling that went on. We were at 80%, so about 0.5% of the stocks moved around. There's still 13,218 stocks long as the database on a short-term basis remains very bullish. I thought we would see this liquidation. We didn't get the lower close. A lot of stocks remained above key areas, and we see that the results of the models continue to hold. Now, one of the things as you watch this channel, I am driven by the models and I wait for these sell signals to come in to tell me about the breaking of trends based on the short-term and the intermediate trends. Starting on the futures, there was an interesting action overnight. We saw a surge sharply higher above the 3100 level, trading to 3113.50. It was below the R2 on the point on the daily grid. We traded up to the 200-hour moving average and then bounced off of that. We saw some pretty good selling as London opened, as it's possible that some folks are taking some money off the table before Chairman Powell does his opening comments at 10 o'clock. Looking at the daily futures is an interesting pattern. As I mentioned in yesterday's video, I talked about the alternative wave count being triggered. It did trigger in the futures market, but it did not signal in the cash market, which I'll show you in just a minute. But we traded once again down to the 200-day moving average. We bounced off of that, but it looks to me that this pattern that's unfolding is still part of a corrective wave. This may be the rebound that I talked about on Thursday and Friday's video, as I thought we'd see a decline into some support, a bounce off of that support, head back toward the 3100 level, maybe a bit above that, and then start a decline. I'll show you in the cash market where the Fibonacci numbers set up on this pattern, and it's really interesting based on the Fibonacci numbers and the daily grid and how this is all tying together. Looking at the cash market, what we saw was a sharp reversal pattern trading just below the 200-day moving average. Market snapped back with this reversal rally that we saw yesterday and came short of confirming the alternative out, and I'm going to break that down. So as we look at this pattern, the key levels, there's two levels that needed to be watched for the alternative count. One was the 2954 level, depending on how you do the wave count, whether that was the top of a one, and the secondary level was 2944. So an overlap, if yesterday's action would have traded below this level here, 2954.86, that would have negated a five-wave pattern. I talked about in the video that wave 3 was confirmed. That was a minor 3 of an upward five-wave pattern that suggested the market going up to the 3400 and greater. On Sunday night, we were seeing extreme action. Like I said, the futures actually went below that level and the cash has not. Now, I live and breathe off of the cash markets, not the futures. The futures have been good forward-looking indicators because they have virtually a 24-hour trading mode when I'm just looking at the cash, which is the primary environment that we're watching. What this tells us is that it did not violate that number, and this is likely to still be a wave 4. I'm going to blow this pattern up so you can see it a little better in this window here. Two things that I want to show you is the first one is that this Fibonacci grid that's on there, you can see 50% is 3108. So far we traded 3113. 0.618 is 3137.68, and then the 0.76 is 3173. Now there's an interesting thing here because you'll see that there is a gap. 4 days ago when this sequence started, there was a gap down. The interesting thing about this gap is that it lies between 3181 and 3123. So to fill that gap, we'd have to trade just above the 0.618 retracement to fill that gap. There's a good chance that we won't fill the gap, that somewhere between the 3137 and 3151 levels will represent the top of this particular sequence, which is likely to be a B wave, a minor B, and I'll draw this first leg down would be this A wave, which traded down also to the 40-period moving average. I discussed this as well in last night's video, that there was significant support at the 10-week moving average, and that was a very similar number. Where the lows came in, that support was just below where the actual low of the market was yesterday. And the rebound that we saw and reversal sets the tone for the potential to move up into this gap area, or at least do a full-blown retracement somewhere between 3108 to 3137. I have another number that on a projection that is telling me that we could go to 3151. If we go to a full 0.76 or greater and fill that gap, then that will set up a different pattern, but it doesn't look like that's going to be what happens. The momentum that you're seeing on ppm 1, ppm 2, and 3 are not suggesting that we're going to enter into an impulse wave just yet. The other thing that did happen, this trade that we've been tracking going back to May 5th is still long. It did not get triggered out. A lower close yesterday most likely would have triggered this out, and we would have been in a neutral phase right now, but we continue to hold that position. The trigger point is still that 3028 level, so as long as the market remains above that level, we're going to keep this position on, and the configuration we're going to see set up over the next couple of days is likely to see a rally into those numbers I just discussed between 3108 to 3137. It would have to take out the reversal low of yesterday. If that happened, then the whole game's over. With Powell talking today, he's going to be looking to pump this thing to keep everybody excited and positive. And you can see just by the futures right now, up 28 handles, everybody's coming in with a positive expectation. So we'll see how it unfolds intraday, but this is the pattern that is likely to unfold over the next several days. So we had basically 5 bars down in this pattern. We're going to get 3 up, so we'll have 2 more days on the upside. That'll finish Powell's speech. And then on Thursday, we'll see as we come into Thursday's action, we'll see how this thing sets up to see if we can start to retrace back down to test the lows that we saw on Monday morning's open. We're getting a little bit ahead, but right now we're looking like another couple of days higher. And as long as we stay above the 3028 number, we're going to continue to maintain that long position that's been holding since May 5th at 2840. This will complete this video. Look forward to working with a lot of you on the WaveTech training meeting. Thanks again for watching. We'll talk to you tomorrow night.